Good afternoon, everybody, and welcome to Stock Market Today by Investors Business Daily. It's Justin Nielsen here, and I am joined by Ed Carson. It is Tuesday, October 25th, 2022, and we're going to walk through the day's action for you today. Another strong day in the indexes. Ed also has a few stocks that he's going to cover. What do you got on tap for us today, Ed?
Yeah, a few stocks that showed some bullish action from different sectors: Shockwave Medical, Accelerate Energy, and Dollar General.
Okay, very good. But first, let's take a look at the indexes. Looks like the S&P 500 closed up 1.6%, Nasdaq Composite up 2.25%, Dow Jones Industrials up 1.1%, and the Russell bringing up the lead with a 2.75% gain. That's the Russell 2000, of course. So, Ed, let's maybe start and take a look at some of the indexes. And I mean, we've had a pretty strong move off the bottom. We had the follow through day on Friday. How are things looking to you?
I think things are looking pretty interesting here. The Dow has been sort of leading the way. It didn't lead the way today, but it's the one that's making the most progress through resistance levels. Went right through the 50-day line yesterday.
Mhm.
Looking at different things. The Nasdaq is sort of the laggard, but it was a strong performer today. Had a nice gain here. We're seeing the indexes continue to build strength. We're seeing more and more stocks breaking out or flashing buy signals. So it's looking healthier and healthier. I mean, I do think that the 50-day line could be a big test. And if it passes that test, there's the 200-day line. There's the August highs. So there's always a bunch of tests. But I think this has to be encouraging, and investors should be taking note of that.
Yeah, you've got a lot of reasons to be a little frightened out there just because there's a lot of hurdles to go through. I feel like every time Allie is marking up the charts, there's almost like five lines of resistance to get above. But let's maybe shift into a longer term perspective and take a look at some of the weekly charts because a lot of these charts are showing that, while we're just coming up to the 50-day line for some of the indexes on the daily, on the weekly chart, we are coming up to the 10-week line and beyond for a number of these indexes.
Yeah, the Nasdaq is now, even though it's got some distance to the 50-day line, is just above the 10-week line, so that's a positive. The S&P 500, which I believe closed just below the 50-day, but has really, sort of decisively, no, I don't know about decisive, but sort of close to decisively moved above its 10-week line. I don't want to get too excited. And the Russell 2000, that looks a little bit similar to the S&P, moving above the 10-week line. So again, starting to move through these hurdles. It's definitely a positive sign. Lots of things that happen. Earnings have been a key factor. I'll just note that Apple, Microsoft, Google, and Amazon, guess what? They're all closing in on their 50-day lines. And what else is happening? Well, they're all reporting earnings this week. I mean, it's not a coincidence that these mega caps are moving toward their 50-day line when the S&P and Nasdaq are. So if they sell off, that would be a bad sign. We'll have to see how some of these numbers come out over this week.
Mm. Now, after this week, I mean, we're going to have a good portion of stocks, on the other side of their earnings reports. What's been your take on the earnings season so far?
Well, I think generally it's been pretty positive. Obviously, there have been some huge disasters too out there, but you have to say that
We're looking at you, Snap.
yeah, looking at huge Snap, there's other ones out there. I mean, there's some big names. There's some big winners too, but I think just overall, there's been a positive reaction. Now, sometimes the earnings haven't looked so good. Sometimes these stocks, the earnings are down 40% versus a year earlier, and yet they're still rallying off of that. So the market, is suggesting maybe some of the bad news is priced in. So we'll see. I mean, this is the big week. I mean, now have expectations been raised a little bit? I don't know. But I think that's one major factor why the major indexes rallied last week and into this week, when for quite a bit of it, the 10-year yield was rising, and so that was, interest rates, they came down today, but obviously they've had a pretty strong run over the last few months.
Yeah, yeah. So let's go ahead and kind of drill down there a little bit. I mean, the 10-year treasury line, this is the yield, of course, we're looking at 0 TNX, which is the 10-year yield. So it goes in the opposite direction of the bonds. But I mean, this has been a very strong move. I mean, this is almost looking a little vertical, and certainly today's action being down, when the yields are down, that's generally good for stocks. Um, do you think that we could see more downward pressure on the yields, especially with this potential Fed pivot that everyone's talking about?
It's certainly possible. It also, this reflects maybe concerns about the U.S. economy because the two-year yield, it did fall today, and it's come off of its highs from Friday morning, but today it fell 3 basis points to about 4.47%. So, and that's more closely tied to Fed policy. So there's sort of an incremental shift that maybe a slight majority expecting 75 basis points in December now to slight majority for 50, but it's not like the radical shift. Can keep falling or even just come down a little bit and then level off, I think that could be pretty constructive for stocks. But we've seen it before where you'll see a few days or a little mini trend. It's like, oh, maybe we're coming down and then running right back up. So you don't want to get too excited. And still, I think investors should be trying to take part in this market, but and stepping in, but step in, don't rush in.
Yeah.
There's still, especially there's a lot of headwinds, and there's technically and out there in the economy, just that take it step by step, and if your positions are working right and the market is working right, then you can add to it.
Mhm. Maybe we can just kind of close out because you did mention a lot of headwinds, and certainly China faced some headwinds. And we were talking about this a little bit yesterday when the news came out with President Xi getting that unprecedented third term. There was a little bit of a bounce back in a number of these stocks in the China area, but I mean, there's been a lot of destruction there. Is this something that any change here that we should be looking at for the Chinese stocks, or are they going to remain in the penalty box for a little while?
I mean, you have to see them come up. There's really nothing that's looking good in that sector. It's going to take quite a bit. I mean, there were enormous drops after trending lower for several months. So
Yeah.
this isn't like a sector was surging and there was just one bizarre drop, and now it's like, okay, well, that was weird, but they can repair. It's just a lot of work. Like Baidu hit a 12-year low. There was a lot of really big losses. Um, it's there's a lot of risk with China stocks right now.
Yeah, I mean, you're on the KWEB, KWEB, which is the ETF Crane Shares CSI China Internet. I mean, if you go to the monthly chart on that, I mean, this is the lowest it's been since it came out. So that's not good. Let's go ahead and take
Yeah,
a look.
yeah.
Oh, go ahead,
No,
Ed.
no, go ahead.
Well, I was going to shift to the stocks, but if you want to, one final note on China.
Yeah.
Okay, yeah, we're done there. Okay, so let's take a look at some stocks, and Shockwave is one of these leaders that we've been looking at for a while. Ticker symbol SWAV, and this is one that was kind of hanging out below its 50-day moving average line, but popped above it with some pretty decent volume today. What's your take on this one?
Yeah, I mean, there wasn't a lot of great action in the last few weeks because it was sort of hanging out there. It wasn't terrible, but there wasn't really any real volume when it was trying to come back up. And there had been some bad breaks along the way. So there were reasons to be cautious and reasons why you didn't want to jump in early, especially below the 50-day line. But as you say, it broke above the 50-day line. It got above this trend line that you could draw and moved higher. And just full disclosure, I took a position today as it was sort of breaking above that. It was interesting. It came up very quickly, and it actually came back down. This is one reason why I think people should be cautious about buying when things start getting out there. This came all the way down, actually below where I bought it, and then stabilized a little bit. But for people who bought up here, this was a pretty big drop, at
Mhm.
that point. So I think while so far it's doing fine, and maybe it'll go on to great and wonderful things, but you just have to be careful, even when you're looking at strong stocks. I think that the intraday moves are important to not buy too extended.
Right. Yeah, I should disclose I also have a position in that myself. I think we may have gotten in there at almost the exact same time. But yeah, it certainly did have that pullback, and you kind of like, okay, well, was I too eager? But as you said, the big issue that people have to be careful of is, I mean, this was up 6% at the close, and it was up a lot more, when it was
Yeah.
at its peak. So you do have to be very careful buying extended. What is your risk tolerance? Because I mean, if you were buying at the top, by the time it came down all the way back down to 290-ish, you could have been down significantly there. So be very careful buying extended in any market. Let's go ahead and I saw that you had a utility stock on here, ticker symbol EE. How often are you
Usual
looking at
utility.
utilities?
I think they do liquefied natural gas storage, some other things like terminals.
Yeah.
I think they signed a deal today with Germany about like LNG storage, like outside the port of Hanover or something today. But no, I was just looking at it. It did come off highs, but it's pretty close to its 50-day line. Maybe you could take, if you wanted to, an early entry. This is on a weekly chart. There is a base here now, sort of next to this sort of failed base, and so it's a little bit smaller, still pretty volatile here. I mean, but it's 26%, not 41%. Unlike a lot of things, not necessarily energy, but this one is well off the lows from earlier in the year, whereas so many other stocks hitting lows. This one has pretty good growth. This year, it's not going to be tremendous, but you have to keep in mind it had a loss, in these situations. So now it's turning higher, and you can see the revenue growth is really impressive, and next year should be strong, like a lot of LNG plays.
Right.
So it was above average volume. So there's some things to like about this name.
Yeah, and that's an important point that there are sometimes you look at the industry group and you think utility and you're like, oh, forget it. I mean, the same is true of some of the shipping and container. That there are those that have that LNG exposure, and certainly transporting LNG, especially with winter coming, Europe looking at some serious problems potentially this winter with the gas. So certainly transporting it and getting it over there is an important point. So sometimes it's not about the industry group itself, but what is that kind of exposure that they have, and sometimes you get some trends that way.
Absolutely.
Let's go ahead and round this out. You had one more stock for us, and that was Dollar General. So, we have our medical, which again, a lot of medical stocks doing well. Utility, but let's go ahead and call it energy related. And then here we are in retail. Retail, I mean, with the recession coming, what is it about Dollar General that jumps out to you?
Well, I like they have a couple of strong volume days here, and it bounced basically, pretty close to the 200-day line, sort of bounced right at the low of this base, which is only a 10% deep base. So, these fluctuations aren't that wild. It looks a lot different. And so coming through the 50-day line and extending here, I think you could take an early entry off of a trend line. I believe this was added to swing traders, so I wouldn't be surprised if it had a similar mindset involved. So as yesterday, you probably could have bought at the end of the day, but it was like right at the end. This one was a more impressive day. There was higher volume, and there's just a lot of things in here. There's also, I pointed out, because you don't want to just. I think it's interesting that growth stocks are starting to come on, but there's still energy stocks, there's still retail. I think that's a really positive sign that you see a lot of diversity, but it's also something that you should have in your mindset. Where for watch lists, don't just say, "Oh, I like super growth stocks," or "I like energy stocks." It's like, no, let the charts and the numbers sort of help you out and point you to what might be working.
Mm-hmm. And we were talking yesterday about Genuine Parts and AutoZone and some of these companies they're in the retail space and they do well in recessionary environments. And I think you can certainly put Dollar General in that same block. That look, when people are feeling the pinch of inflation, they might go to some of these more discount and variety stores to kind of get their goods. And a lot of times you can get quite a bit there, not just the odds and ends, but groceries sometimes even.
Yeah, and I think that's something to keep in mind, is that a lot of stocks that have been moving. Now today was a little different because we saw more growth stocks
Hmm.
like Shockwave moving out, and there was others, plenty of others. But there's been a lot of defensive names that have been moving out, which is fine, but it also reflects that you can't just think that this is an amazing rally, it's an amazing economy. There's reasons. This is not. It's not. We'll see where we go, but it's not your typical Super Bowl market.
Hmm.
And where everything it's growth, it's high risk. There's definitely things like Dollar General, which is a solid stock and they're a solid performer. But you just have to keep that in mind. It's like that in general.
Hmm. Right. And to put that kind of bow on the market portion too, I mean, just as a reminder, look, we don't know if this is a bear market rally or if this is the beginning of something, truly wonderful. But we're looking at, hey, we might be, at the beginning of something, but growth often does take some time to kind of come back on board with that turn. So I remember in 2009, after the financial crisis, it was probably like 3 months before things came on the growth side. You had a lot of the defensive stuff still working and a lot of the beaten down stuff that was leading at first. So just something to keep in mind. But
And I just want to do one last thing. As I mentioned about how Microsoft and Google, all these big tech names are coming up to their 50-day line. Well, we had a couple of them report, and Microsoft, they beat views, but I guess their cloud revenue was a little light, and
mm-hmm,
that's where their growth names are. So that one is down something like 3% before the open, overnight right now. And then you have Google. That one, oh, sorry, so yeah, this one's down about there. And then Google, they just missed. So, a lot of the happy talk that we had today, we'll see how things go. There's other things out there, but these are two big names. Yes, they are way off their highs, nowhere close to being actionable, but they're still relevant. There's a lot of companies that supply Microsoft and Google. This is not a great sign for Amazon earnings as well for on the cloud side. So something to keep in mind. Earnings are they've been sort of a positive, but maybe tomorrow they'll at least start off as a negative.
yeah. Well, and certainly, if you look at the way that the indexes closed, right at the top of their ranges, very well. You look at the futures and, just the last, while we've been on this show, you've been seeing a pretty dramatic drop in the futures. So that bar would look very different if it just added a couple extra minutes here.
Yeah.
Now, of course, as you often point out in your futures column, which I would highly recommend people read this evening, overnight action doesn't necessarily translate to the opening the next day. A lot of things can change in the meantime. But it's certainly worth noting that this is not a good start for a lot of these companies. And because of their weight in the indexes, it's going to draw those down quite a bit.
Yep.
Absolutely. Well, thank you very much for your analysis here, Ed. That's going to do it for us today. As a reminder, we're going to be back on the show IBD Live tomorrow, and you can reach that if you haven't already at investors.com/IBD Live. We start 10 minutes before the open. That's 6:20, 9:20. Pacific and Eastern Standard Time. So if you want to join us for that, we're going to do basically an hour and a half of analyzing the opening bell, go through the news. I'm sure part of these items that you just heard will be on the news tomorrow. So hope you join us for that. And we'll also be right back here for the Stock Market Today video tomorrow with Ali and Ken. Hope you join us. Thanks a lot.